breaking news.
The US airwaves exploded on Friday morning with news one of the biggest and most powerful players in the financial industry is in deep trouble.
The suit brought against Goldman Sachs
in a civil lawsuit, the Securities and Exchange Commission, or SEC, lays out a collaboration between Goldman Sachs and a hedge fund client. The lawsuit alleges that with the American housing crisis looming, the bank bundled complicated securities tied to the real estate market and sold them to investors without apprising them of the risk. Goldman and the hedge fund then bet against those same securities, aware of the likelihood of defaults. The government claims the hedge fund, Paulson & Co, paid Goldman Sachs $15 million to set up the deal. The hedge fund made $1 billion, while investors lost $1 billion. It's not known how much Goldman made from betting against the bad securities.
The Dow's down 110. Your financials are obviously leading it. Utilities are down, transports are down, drugs are down, retailers are down, oil is
Goldman
down.
Sachs shares went into free fall, and gold, oil and other currencies went the same way as uncertainty took hold. The investment bank quickly released a statement saying the SEC's charges are completely unfounded in law and fact, and we will vigorously contest them and defend the firm and its reputation. The timing of the fraud charges has political implications too, coming just days before the US Congress begins debating legislation aimed at regulating the financial industry.
Never again should American taxpayers be forced to step in and pay the price for the irresponsibility of speculators on Wall Street who made risky bets with the expectation that taxpayers would be there to break their fall. And we can't leave in place a tattered set of rules that will allow another crisis to develop without the tools to deal with it.
We're about to go into a contentious financial regulations discussion, and so this is a bit overdue. The public wants it. It's coming now, and this could be an opening shot or a shot across the bow of the industry as we go into difficult negotiations between regulators and the industry about how much regulation and under what terms.
There's continued public anger over the big bank's role in the economic crisis and Washington's subsequent multi-billion-dollar bailout funded by taxpayers. Goldman Sachs received $12 billion. Even if Goldman Sachs isn't too worried about its popularity, experts say it should be worried about its image within the financial industry.
Its reputation as a tough, really hardcore competitor that takes care of its clients could be tarnished, possibly, if the notion is that they take care of some clients at the expense of other clients.
The lawsuit will either go to trial here in Manhattan or be settled out of court, with Goldman Sachs forced to pay significant fines. The latter is more likely. But until then, with economic and political pundits watching closely, this case could signal the end of what many see as greed-driven and unacceptable behaviour by the big banks. Cath, Al Jazeera, New York.